welcome back to the Cryptoria. This is our new episode. This is a new our How to DeFi episodes, and I believe you guys have learned a lot from our previous episodes about restaking. So this is our masterclass. So masterclass, I believe you guys definitely gonna guess who we invite today. So we invite Robert here. Robert is the CEO of Eigenlayer Foundation. So welcome, Robert. Would you mind introduce yourself to our audience?
Yeah, absolutely. I'd be happy to do that. So hi and welcome everyone, and thanks for either listening in synchronously or if you're listening later on, welcome as well. Yeah, my name is Robert Drost. I've been with Eigenlayer for about 1 year, heading up the foundation. We've had a lot of growth. We're, started the year off with just me and another member joining from the Eigen Labs team. And we're ending the year with almost 24 people in the foundation, doing a lot of work on building new governance in general for us, as well as for any other protocols. We're building a whole new governance system. I'm happy to talk about that. And then we're also have built out really strong presence around grants, business development, protocol ecosystem, because Eigenlayer is very fundamentally, it's an infrastructure layer, and its value is only coming out of what people build on it. So it's, very clear from us and recognized by, Sriram, myself, a lot of people in the founding team, that, our success is really just reflected in the success of people who, take a big risk. I mean, it's an opportunity cost to decide to build your protocol somewhere. So we really appreciate people who do that.
Amazing.
So I didn't do the intro myself. So let me actually just say, before Eigenlayer 1 year, I came into crypto and I worked at Consensys, Joe Lubin's company that kind of founded the entire application layer around Ethereum. Mm-hmm. So you can see a theme here. I came into crypto. I have an infrastructure background. I worked in a number of the Web2 companies back in Silicon Valley. I'm originally was based out of Silicon Valley, although now I live in Grand Cayman. I also started companies of my own in Silicon Valley. So I just had a lot of this founder and operational experience in software and hardware, data centers, high performance computing. And I came into crypto recognizing the computing and the performance was down here on the floor in 2017. The value was up, it was already up, right? It was already in the, $1 trillion type range, but what could be done with it, the world computer at the time was really quite limited. It just had this great property. But I came in, I was very interested. My background is, more on the data science, machine learning side. So AI side, that's where I had moved to in my career. And coming into crypto, I came in the space because I felt like probably one of the biggest values of crypto, and this is back in 2017, was going to be that it could fix the problems of technology, especially around the coming revolution of AI. So giving people sovereign identity, giving them privacy, giving them sovereignty over their identity and their data, allowing them to monetize all of that rather than become, the product. But I worked for 6 years helping Ethereum scale. I'm, a big Ethereum fan. I think there are a lot of other great chains people should pick, but for me, infrastructure and the actual financial settlement rails for Web3 and the best place to build protocols that are building the Web3 of the internet are going to be around Ethereum. And so that's why I have a huge affinity for Consensys already doing that, and then Eigenlayer as well.
We like Ethereum so much, and we just did one episode with Michael Neuer, and he introduced
Great.
Did you meet me in the DevCon?
Yeah, of course, I know him.
Yeah. His permissionless money is so so incredible, and it's just it's just the very big ideologies, and for whole human beings to achieve.
Mm-hmm. Yep. No, we have we started out Eigenlayer very much around this Ethereum ETH narrative. And that's really a reflection of the fact that one of the incredibly strong network effects of Ethereum is the fact that it has this very pliable value in the security layer that allows you to stack up DeFi space. Obviously, there are other places that have very strong security. Over time, we're going to see more and more of those. But Ethereum was really started off with this idea that you need to secure, have the money itself be a security layer for these transactions and for settlement. And yeah, Mike Neuter, those guys. I don't know if you caught that, but we actually finally publicly announced it had been in the works for about a year. But last week or the week before, it's pretty in the recent past, we announced our 1% pledge to the Protocol Guild, which is kind of capping off, a lot of things we've done that have been very synergistic with Ethereum over the last year and a half. And the way we communicate about Eigenlayer is really about like extending a lot of the great work of Ethereum and all of the protocols from there into an even easier to bootstrap, easier to innovate space that still flows value back into the Ethereum ecosystem at large as well. But yeah, so we announced 1%. It was a, net value of it was over $80 million. So that will hopefully, all of us saw DevCon, there's a need for a beam chain. We would like that. We would like to have that in 2 or 3 years, not 5. We would like to have base rollups ASAP. We would like to have more, more movement towards full dank sharding, but at least the blob space should be increased by 2x, 4x, 8x. All of that takes work, and it takes real people. And for people like myself and Sriram and a lot of people in the team, realistically, we really value people who spend time on things. And the Protocol Guild has about 200 members across almost 30 different projects. And these people actually are the people who move Ethereum as a public good forward in the roadmap. They build, test, and support, maintain, and release all of the software that is Ethereum. So this is something the Protocol Guild allows those members to sort of reward themselves. And so in Ethereum, ideally, every protocol would give 1% of its token value towards the developers that build the base.
Wow. I think that would be pretty attractive because, in the Chinese community, there weren't much news or information about that. So definitely we will get your message deliver.
Yeah,
So
we kind
to
of view it.
attract,
Yeah,
builders.
yeah, we definitely view it like, when you have, foundations or other groups, the money is your mouthpiece, right? And so,
Financial incentives, of course.
having an organization that's by developers for developers to build Ethereum and having them have more resources to be able to attract more developers, give them more incentives, just kind of grow that. There's that thing in game theory, which is show me the incentives and show me the outcome. And, you definitely want people to be doing things because it's their passion and what they want to do, but you also want people to be able to buy a house. You want them to be able to put their kids in a good school. You want them to be able to take care of their parents, because if you don't do that, then they're going to have to go work at, in the US, it would be like Google, Facebook, one of these companies, and they're just going to be another cog in the current Web 2 tech world that we have, where the internet it's not been the most positive for society. Number of people talk about it. I think Mark Andreessen last week gave a pretty compelling talk where he went through just how broken the internet is right now and why, Web3 and crypto is going to fix it. So I'm not the only, there's a lot of other great people talking about it, but I strongly believe that as well.
Amazing. Thank you for your opening, Robert. So, the first impression of not just for me, but most of our audience from Eigenlayer is restaking, right? So this term, at the first place, is pretty technical to me. Even I need to figure out what's staking first before I enter the define. So now we got restaking. So, Robert, could you please use really simple terms, non-technical or analogy to tell audience what restaking means?
Yeah, I think the best way to do that, and I know there may be people at different parts in their crypto journey, so I'm going to kind of move through a couple different stages, and I do know a lot of people kind of know some of these, but let me just first talk about the principle of staking, because restaking is exactly like staking. It's just a layered version of staking. So when you stake on something like Ethereum, then what you're doing is you're taking capital that you have and you're basically trading off and you're saying, hey, I'm going to operate an Ethereum node and I'm going to help to build good blocks. And I'm not going to behave badly. I'm not going to attack the network and try to put something in that would allow me to revert the network and double spend money. I mean, the whole point of blockchain, if you look at Bitcoin and the original idea, is that to have money, you can't have a digital, signature and then use it and print as much money as you want. It has to be consumed when you transfer that money to someone else, and you can't get it back by some kind of a hack that would make the chain give it back to you. So as a staker on Ethereum and the operator, if you're running the operator yourself, it's all one system. But otherwise, if you're a staker and there's someone else operating, you have trust in that operator. And if the operator loses your money by behaving badly, you're not going to trust them again. And so most of the operators that you see in Ethereum, a decent percentage, like 10% of them, are actually solo kind of home stakers, you would call them. They're like a decentralized backbone. And the majority of the rest is various liquid staking pool operators, as well as private arrangements. So if you're a really big investor, you're going to be staking $1 billion. You may not want to run the infrastructure yourself, but you may just sign a deal with, in the real world, another company, and then you split the profits and whatever. So that's the principle of the idea of staking, is that you take something that has value and you basically use that as a trustless commitment that you're going to do the right thing. Protocols need you to do the right thing, and they need to penalize or disincentivize you from doing the wrong thing. So Eigenlayer takes this idea in, every chain has this idea in crypto. Even Bitcoin, which is proof of work, has this idea, because you may not be staking Bitcoin, but you are kind of staking the investment you made in ASIC mining, and then also the energy that you spent ASIC mining. And if you attack the network, you're going to lose that. So that's why people in Bitcoin, even though they don't have proof of stake, are effectively doing something that's pretty comparable. So all of the chains have this, but all of them have it in a way that it's bound. It's not special. It's not general purpose. It's very specific to what that chain needs, and it's providing security on that chain. So the insight of Eigenlayer was that there's no reason that we have to actually say this mechanism has to be, let's say you have, Zimba chain, right? That you have Zimba tokens, you stake Zimba tokens, you run Zimba chain, and then you get the rewards. In reality, security and like the value in a token is reusable. It can be used in multiple places. So restaking recognizes that you can couple together the stake, you can couple together good operators that have reputation, and then you can make those available to a lot of protocols. We call them actively verified services. You can also call them autonomously validated services. They both spell AVS. And these operators are kind of like the Ethereum validators. They're running your network, whatever it is. And your network in this case might be something entirely different, right? It might be like a storage network like Filecoin, or it might be a network that's guaranteeing geolocation. So it's doing like network pings and it's doing time protocols. You can do like anything that happens in Web 2 that the public clouds are providing now. Plus, if you open up your imagination, there's probably 100 times more things you can do decentralized, because the speed of innovation and open source and decentralization is just, it will win every time in the long run over centralized people. So we kind of took stake and we made it general or universal. And we put it into a protocol where we created a marketplace that stake operators and protocols that want operators, good operators and adequate stake together can all find each other. And they can very easily structure in an open market, with open pricing dynamics. What is the value? What is the cost? And we just make that Eigenlayer is this very thin infrastructure level, but what it creates is very valuable, because if you're a protocol, you might be like, hey, I'd like to do another Oracle, and you're like, hey, I see this Oracle that's out there has, $20 billion of stake in its network. How could I possibly compete with that? I hope my token gets to 200 million. But on Eigenlayer, you can actually rent $5 billion worth of stake. And at a reasonable cost, it's just, a cost of providing security for your chain. And so people who are using your network now actually see the security backing it is like a heavyweight, even though you're starting up. So we call that the bootstrapping effect, which makes it really valuable. You can kind of bootstrap your way up in the same way that people don't buy data centers anymore. They just go to a cloud, and elastically get the compute and the servers and the storage they need. So Eigenlayer is a place that you elastically go and get the security that you need, and you just pay for it, on a time basis, just like you buy services, on public clouds like Amazon on hourly or daily or weekly rates. We're not at the level of hourly yet, but there's short-term contracts.
Will be.
Let's call them. Yeah. So in order to do this, this means that the same stake is used again and again. It's a little different than sometimes you use it in some other place. Like we are actually like the AVS, the protocols that are using Eigenlayer, the AVSs, their nodes actually kind of define what's a good behavior of an operator, and then they also, similar to Ethereum, would find cases where an operator is doing something bad. And so you either get rewarded or you get slashed. And so the stake that you put up, like you can have slashing in, Compound or Aave, but it's really liquidation slashing because of margins. In ours, it's more active. Like you are performing compute storage services, you're actually working on the network. And if you do it well, then you get the reward to the operator who then shares it with the staker. Or if you do it badly, then it gets slashed and then that operator loses reputation. So they lose something that, for them is more important than money. And obviously the stakers lose their rewards as well. So it's, kind of an active, dynamic marketplace that you get there. So, one of the biggest values is from the point of view of the staker, you're getting more yield than you would have on Ethereum alone. You're still getting the Ethereum yield, but now you're able to get rewards that are on top of that. And, on the protocols that are building on Eigenlayer, we have around 30 that are active. And actually out there, we have hundreds that are in the pipeline. And so it's this massive space because it's just a very easy way to kind of launch a protocol. In theory, if you look at the cloud, there's this idea of middleware services. The protocols, the AVSs that are building on Eigenlayer, a lot of them are building a part of what you would need to eventually build like a full stack application. So applications, many of them, if you look in Web 2, they use 10, 20, more than 20 different large services, that are actually Amazon software, other software vendors. And our theory is that final end applications that are going out to consumers, they won't just be going to like one blockchain and then building everything else on top. They will actually be consuming software as a service that is secured by something like Eigenlayer that then is settled and provides all of this decentralized security, back eventually to layer 1 Ethereum as a financial settlement layer. So, we're building something big, but everybody in this ecosystem has an opportunity to get something valuable out of it. Stakers and operators get additional rewards. AVSs get access to stake. Because the Ethereum is already staked, if you have 100 AVSs that are paying the stakers and operators an incremental 5% on a per AVS basis, that would actually translate down to 5 basis points. So the cost can actually be quite low as it gets up to scale. Obviously, it's not there yet, but in terms of the vision, you can see that the bigger that this gets, the better that it gets for everybody. You have more rewards for stakers, operators, and you have lower costs for the protocols or AVSs that are utilizing Eigenlayer. Okay, I apologized for something that was just short, and then I went into a lot more detail, but hopefully it was still, I was trying to still just kind of talk about the principles as like plain facts as I could.
What kind of the protocols need those kind of the security things? Because we know we have a lot of the layer 2s. So the layer 2s is supposed, the layer 2 has their own securities, right? So a lot of the apps, they're building upon on the layer 2s. So these should be shared the securities about those base layer 2s. Who needs the Eigenlayers rather than just I go to just like the base or go to the Solana or like others. Yeah.
Yeah. Right now, like if you look at blockchains, they've only captured or they've only fulfilled like a fraction of percent of the value that you can get out of decentralized technologies. So if you look at something like the Web 2 world, the Web 2 world has surpassed trillions in revenue at this point. Every year, this isn't people staking, this isn't TVL. This is people actually paying for things. And so blockchains, blockchains are like a very valuable service that you provide. They're kind of the underpinning that you need in order to have decentralized trust. But blockchains are, it's very hard for them to actually serve, the purposes of everything that you need for software. Like, how would you actually build a Cloudflare or like an Amazon CloudFront technology that is serving, petabytes per second of bandwidth around the world directly on a rollup? It would be very hard to do that. You would actually need in this to have millions of different nodes that have, an incredible amount of solid state drives and others with a huge amount of bandwidth doing it. Do we need to be able to do this in a decentralized fashion? Of course, because if you're going to have it be permissionless and censorless, uncensorable, then you can't have people who are able to go in, a government goes in and just puts a cease order on do not send this person's data through, or search for this and then stop it. You can't have this sort of containing there. So we want everything that's going on in technology to have decentralized trust to it. So blockchains are kind of an anchoring point, but everything else needs to be built on top of it. I mean, I can mention a few other platforms and others. I mean, obviously one is like raw storage, but storage raw is just like disks. People actually need databases, and there are so many different flavors of databases optimized for different types of read and write patterns. All of them need to be able to be, on decentralized storage and have all of their operation be censorless and be permissionless and be, full decentralized trust. And if you look through, if you look at something like Google Cloud or Amazon Cloud, what you'll see is that there's an incredible amount of those. So I might be getting ahead of myself a little bit. And maybe for a lot of people who are only in the blockchain world, let me step back and let me talk the here and now, of course, is that there's an incredible amount of scaling happening in the L2 space. So people are exploring all sorts of different ways that you can build chains. And so people are building very compelling roll-ups on top of Eigenlayer. There's people building essentially a redo of the whole Cosmos ecosystem, completely compatible, except that it has the right kind of central coordination in it. It's a couple of people who are kind of big people in the Cosmos world, and they're building this protocol called Layer. And so somebody would build something like this, which is essentially like a layer 1 network on top of Eigenlayer. Then, we have other providers. AltLayer has been a close partner for a long time. They built a lot of great things. Mega ETH, I think you would have seen us around DevCon and Zuzulu. We did a joint event with them. They're building something very special. Is they're taking the limit of performance that you can get on a rollup with decentralized trust. And they're doing it by, Vitalik has talked about this a number of times, which is using L1 as the absolute decentralized trust security for your rollup, but then taking your rollup and figuring out how to, without giving up that decentralized trust, run the rollup at absolutely breakneck speeds in a very centralized fashion, way more centralized than Solana. Solana can't be fully decentralized in how it sequences because it still has to be decentralized to be competitive to the thesis of Ethereum. And there's a lot of debate about it, if it really is, if it really isn't. I don't want to go into that. But something like Mega ETH goes ahead and they just say, if we're really centralized, we can get down to 1 millisecond block times. And we can go into 100 megabytes per second of data bandwidth on our chain. And so it completely changes it because now you can actually have 100 frame rate per second updates settling to a blockchain. Completely different if you're looking in high frequency gaming applications and others. So people are looking at really kind of wild different spaces that you can do in the design space. And really happy. Mantle has also been doing great stuff on the roll-up side as well. So just a lot of very strong people who are building. So the base blockchain level, of course, on a scaling and functionality basis is integrating more things, and we're seeing that. But and the reason is just coming from the infrastructure world, I always kind of go to the vision I came into blockchain for, which is how do we fix technology? How do we fix the internet? How do we fix the web? And my hope from the very beginning, and I'm sure we're going to get there, it might still be another 5 years, maybe 10 years, but we will successively over time build technology in a form that works much more for humans rather than corporations and stockholders. And, the fact that we can at Eigenlayer be a part of that journey is really exciting to me. But, the majority of that journey is going to actually be built by all of the protocols that build on top of Eigenlayer. So I always tell investors and others, there's you might have missed Eigenlayer, you might have missed a few protocol, but there are going to be thousands more. Just think of the entire Web2 investment space that's been going on for 30 years. And now imagine all of that's going to be rebuilt in the blockchain space.
Amazing. Amazing.
Yeah.
So, go ahead, Vivian.
Yeah, I just want to say it's just more in the Web2 era, it's more the every protocol or every tech companies, they are building by the corporations. So they normally have the huge capitals, a lot of the huge teams, and they can build one thing. And they build something for people, or they build something to sell to the consumers. And in
Mm-hmm.
Web3, I think most of the Web3 is what Web3 charmings me is more like the every protocol is building by the individuals and they are using for the individuals. And I think that is the mainly difference between the Web 2 and Web 3. And I think that is mainly difference that attracting a lot of the people to the cryptos.
Mm-hmm. Yep. Yeah, absolutely. And, I like that you make that point because the reality is like that's what we're building. When I talk to my Web 2 friends, because, when I go back to Silicon Valley, I run into all of them. I try to red pill them. I try to get them into crypto. Some come, others are going to take a while to kind of get it. They're all very excited though when we're in bull markets, and in general, new people are not excited in bear markets. I mean, go figure. Why would that be? But I always tell them in the bear market, join now, create a protocol now. Don't get excited at the top. Get
Until
excited,
too
buy low,
late.
sell high. Yeah,
Yeah.
unfortunately, every time. But then they kind of ask, and they're like, yeah, but now you build these protocols, and like, well, why won't they do what Facebook kind of does, which is turn the customer into a product? And I go back to blockchains have this incredible feature to them, which is that they can fork. The community can decide that, hey, this is not going well. I don't like how the people creating this protocol are running it. I don't like how the DAO is running this protocol. And they can go ahead and they can just say, hey, look, we're going to actually take all the state, all of it is visible, right? That's why data availability and data posting is so important. And we can basically say like, hey, we're going to fork. It gets harder over time. And so there's some ideas, some very interesting things Eigenlayer is going to do to kind of help move that along. But the more powerful that we have, that the users control the ability to fork. Just imagine if everybody could go to Facebook right now. Facebook changes its privacy policy. Everyone's like, this is terrible. I hate this new privacy policy. Well, what do you do on Facebook right now? You don't click accept and then Facebook kicks your account out. Like that's the only thing you can do. And so you get this huge harm. And it's the reason why we don't even read 100-page privacy policy changes. We just sort of roll our eyes and click on them and say, I wish there was something better. But crypto is something better. Like this idea about forking and the decentralized trust means that imagine if we could go to a Facebook and be like, hey, we don't like what you're doing with the network and the privacy policy. So we're going to go ahead and just fork the entire company. And the new company is going to have a policy that we like better. We happen to also not like your moderation. It's like, making people feel extreme. The ads that are showing are negative and everything else. And you can just fork it. In the blockchain world, it's an ideal. It's actually very hard to achieve that because there's a lot of spots where you can get into stickiness. But in general, the blockchain and its underpinning has this idea about, public software, public data, public identities. But while all of these things are public, they're still owned. All of the data can be owned as NFTs. All of the identity can be owned by users. All of the value is owned by users. So this reshaping, and keeping like the model of the real world inside of the technology is, to me, the most innovative thing. And it's sort of, in my career in technology, I always kind of early on was just like, the technology goes into the capital markets. It goes into regular companies. VCs, FANGs come out. It goes into a, forever growth. And we get to where we are now, where companies are looking at how to be $10 trillion companies. And we have billionaires that are, approaching $500 billion of money. And it's all very kind of centralized in collecting, and blockchain just changes that because, the value kind of stays inside. And therefore, the people who are in control, the users, get to figure out how that value gets shared better.
I have some questions about AVS. You've already mentioned a
Yes.
lot of things about AVS, but I think AVS is the most attractive things currently for
I
the
think it's the
market.
second
And
term. I think the second term after restaking, the people need to understand what is AVS.
yeah,
Yes, go ahead.
yeah.
Okay, so I'll keep these brief because I think I went off on a bunch of philosophy before. So, in again going back to the layer one, hopefully everybody has taken the time to kind of understand like what Ethereum consensus is built on, and it's built on people proposing a block. One person proposes a given block, and then I can just draw dots for the tens of thousands of validators that are out there that look at how they ran the EVM, look at what the block was that was proposed, and then they say, this works, I certify that this is correct. And it's the validators who actually build the chain. Because if they don't approve what was proposed, then it doesn't go into the chain. And that's why they're called validators. And that word validate appears in AVS, actively validated service. So in Ethereum, the only validation you can do is to build the Ethereum blockchain. In Eigenlayer, the validated service means you're a validator who's doing whatever the service gives you as node software. So they can design whatever protocol they want. They can write the software any way that they want. And the operator's agreement is that I'm going to validate using your node software. And then the word actively in the very front is kind of a recognition of like a validating service needs to actually have a real-time aspect to it. And so the A was added. So I'm going to stick with that one, not the autonomously verified. So we're going to say actively validated service. And I've answered the question now.
Cool. So I know the Eigenlayer have their own AVS. It's called EigenDA, right? And it starts
Yes.
running on the Q2 this year. So what's the difference between the EigenDAs and for like the current competitors like the Silesia and Avia? What's the difference between them?
Yeah, I mean, so the core value of Eigenlayer is around this decentralized security and creating this marketplace around people being able to sell, use, and buy security. But there's a recognition that security has no value unless you're able at, over time, approaching infinite data rates, able to actually post all of the data. And if you have like hodgepodge data all over the place, or like, look at something like Ethereum, the first data availability outside service was, a company built on Cosmos, Celestia, right? And Celestia is actually built on a different L1 domain, but it's providing data availability for many rollups on Ethereum. I mean, that's nuts, right? Why would you be mixing two different L1 security domains on the same thing? So for Eigenlayer, it was recognized that this is like a foundational service that needs to be on Eigenlayer. And it's also recognition like this service shouldn't be something that's invested in by VCs and therefore has a separate its own token incentive model and its own need to like extract and build more value and like capture more inside of it. So the idea of Eigenlayer was that we really need something that's more like an incentivized public good, which is how Ethereum was built. And we need that to be something that we can drive the cost down, just obsessively to as low as possible. And we need to be able to scale it out. It's currently at like 15 megabytes per second. We ran an experiment. Every blockchain that is being run basically fit within 7.5 megabytes per second. So our chain already was surpassing the total aggregate bandwidth of, and this includes Solana and Ethereum and a whole bunch of the rollups and everything else. And it was still only using half the capacity, but our roadmap is only limited by demand at this point. If we have anybody that needs more demand, we will just go up 2x or 10x or 100x in that bandwidth. The roadmap is very clear for us to do that. So the DA, that is like the main reason. We have no expectation to be building a lot of AVSs. It was just, and maybe there'll be another one that comes up like this, but like if there's something that should be a core service, and if it should be a core service that is being driven to an extremely commoditized low price, then it's valuable for us to make sure that that happens, not to rely on outside VC investment theses.
So basically beyond the EigenDA, what unique advantage does those AVS chains have with your economic security?
Yeah, so I mean, they can basically get very high level of security early on, and from their perspective, like if you wanted, let's say you have a chain and your token is worth 3 billion, and let's say you decide that you need to have $2 billion of security, and so you do that with your own token. Well, your token has higher risk than Ethereum, which pays out about 3% yield. So you may then have to be releasing 7 or 8% of your token, maybe even 10% of your token. So on the order of like $200 million worth of inflation per year to get that 2 billion of security. So there's a huge economic advantage if you can utilize other tokens that people are restaking to get that level of security for magnitudes order lower cost. So
Okay.
that's an advantage there. We're not opinionated on tokens, so we do also have AVSs or protocols that are building on Eigenlayer that are going to go ahead and put their own ERC20 through the system and then actually have their tokens staked through the system. And they'll actually make their tokens restaked and available to use on other protocols. So it also provides additional sources of revenue for tokens that are with the protocols that are building on our system.
So, oh yeah, Olivia, go ahead.
Yeah. And then if you finish, then I have the questions about, I have the questions about the, still in AWS part. Is that those securities going to be isolated? So if let's say I'm running one AWS, Gian run another AWS, is that possible that both of us, we can claim that, oh, that is same assets, the staked, it's, belongs to us, belongs to our AWS. Is that any technology
Yeah.
things we can isolate those securities?
Yeah, we already have. There's going to be more different features on how we actually allow you to reconfigure your security. But right now we have two types of security. So one is the like default and the lowest cost shared security. And so that security now is going to go ahead and potentially overlap in many different configurations with shared security that other people are, are paying for. And so it has that issue. I'll come back and I'll talk about that in a second, because I think people interpret that sometimes in a way, and they actually don't realize how Ethereum's layer one shared security works. But the second type of security we have is called applicable security. And applicable security means that you're actually reserving a portion of security that will only get, penalized for you. And if it gets penalized for you, then the value of that, which in Ethereum would be built, we also have, an applicable security, the idea that there can be some some repayment effectively for damage that's being suffered by financial losses or other things. And so a portion of the applicable security can actually go back and, cover losses. So it can act as, you could call it kind of an insurance, although it's not really exactly like an insurance market. It's sort of like you're basically able to direct some portion of the slashing from burning to something else more useful than burning. Let me see. Does that make sense with applicable security? And then I'll go back to the other one. Okay. So on the shared security, I actually want you to do a little thought experiment. If I'm running Compound, and then I'm also running, other protocols like Uniswap, and constructing all of these DeFi Legos. Do each of those have a specific portion of ETH that would get slashed for them only if something only happened to them? And the answer is no. Because Ethereum's L1 security, people didn't really recognize this, but Sriram kind of spelled this out along with his grad students that kind of created Eigenlayer, that in fact, all the value of composable dApps on Ethereum is that they all share one level of security. So they share the $30 billion or so, or now $100 billion of ETH that is staked. And if something goes wrong and the slashings happen, then that's happening on that shared stake. So shared security has this nature that you have to kind of, look at how you're composing and what you're doing in the transactions. But this idea that you actually get value out of shared security. You might look and be like, okay, well, what happens if all of these things are happening at once? Is there enough coverage? That's a separate question. If somebody's able to go through all of the value locked on Ethereum, and if they're able to figure out a way to hack all of it at once and make it worth more than the 30 or $40 billion of net security that's available on Ethereum, then they can actually profit from hacking Ethereum. They could pay off enough operators and they could revert the chain to something else, and then they could double spend the money that they stole. So shared security, you have to look at the total amount of what's hacking across this protocol and that protocol and that protocol. Ethereum really hasn't gone to that level of sophistication around security. People point it out sometimes, but then they just sort of think, okay, well, Ethereum is actually really good and there's actually less security everywhere else, so let's focus in those other areas. But in Eigenlayer, the shared security model, there's kind of an inspiration there that when you do, you go from specific security locked to one chain to now having general security, and like Eigen is like a security work token, plus any ERC20s that are all being combined as a general security pool that is used inside of the Eigenlayer space. That's a shared security pool that also has this characteristic of basically being able to use in many places as a group, like dApps share security on Ethereum.
Oh, that is so clever.
Yeah.
That is so clever. Okay. Okay.
Actually, you covered a part we haven't covered from our previous episode, talking about risk-taking. Well, that gives us some really, insightful thoughts. Amazing.
Yeah, I had this property when I came in. So, I have two PhDs in electrical engineering, computer science. So I'm used to like going in deep on things, and I've always done that in my career. I came into crypto, and honestly, for me, I thought it would be maybe 6 months, and it was like 18 months for me to feel like I was really getting to the base foundation, the bedrock of like how and why crypto worked. Like I thought I understood it, and then it was like a Zen journey that I realized there was another master beyond that master. And Eigenlayer, like, and I got to that point. It took me about a year and a half, and it was great. I mean, I was working the whole time and doing stuff productive. It would just on weekends I would kind of read and go deeper and deeper on it. And then Eigenlayer is something that is kind of mind melding. It is actually sometimes bad in a podcast or other things that we talk too much about it because honestly, I don't know how much everybody wants to get into this deep level. But, Eigenlayer kind of looked at that bedrock of, where crypto was currently with its security all wrapped up inside of like one blockchain. And then it said, there actually may be a level of bedrock below that. We're like opening up the next height of that Zen mountain journey. And so in order to get there, it's not something like I describe something and no one should feel like, hey, that is weird. I can't fully get that in my mind. You are then experiencing what everyone else experiences when they find out a very radical new idea. And part of the thing I'm really excited about Eigenlayer is, I actually have privy to like a lot of amazing things that we are thinking about and doing. And there are many, many things you can do once you have this unlock of shared security, and once you have this unlock of different ways you can use it, and more generalized operators and the stuff I was talking about, the cloud. A whole new region of crypto protocols and crypto mechanisms open up. So, there's not only the Eigenlayer today, but it's kind of like, if you want to think about it, the ZK space 5 year backs was like just so rapidly moving because people were inventing all of these new things on it. And, I would say a large portion of the foundations you're going to be hearing coming out of Eigenlayer. But then they're extremely creative things that even surprise us that people are like, I'm going to do this and this with an AVS. Most of these are still under wraps. But, what they're thinking about is also, like a surprisingly, innovation. You're just like, wow, that person's really smart to think about it. So, if we're doing things right, what you should see is if we, do a follow-up, podcast in a quarter or 6 months or whatever, that you're seeing this advance on both the advance of the knowledge in the space and then also advancement on the innovation that has been brought to product in the space around Eigenlayer. And Eigenlayer is not fundamentally a chain. I mean, it's one of the most radical things, right? It's sort of an L1, L2 in terms of what it's providing, because it's providing a generalized version of like L1 security. But we found a way that we don't have to build and lock people into one new universal chain. We have enough universal chains already. We're looking to like leverage what's there already and then unlock it for a lot more use cases. And, hopefully that's the kind of, new fire that we've been able to spark.
Amazing. Right. So, it's all like full of opportunities and definitely like give us a lot of hope in the future. Now, I think we need to talk about something maybe not that happy. So, restaking model faces like potential risks, such as validator collusions and high concentrations. So, what will be the specific measures you guys will take to prevent those risks? And how do those measures protect the network security while also maintaining the user experience?
Yeah, I mean, I wish there was, a magic wand or a silver bullet that we could shoot at this. I sometimes talk with people when they're like, hey, what's the solution for this? And I'm just like, it's a pervasive problem across crypto. You build something that's very open, very innovative, has the potential to be massively decentralized. You look at something like my canonical story on this. I had friends of mine who, work, I know them really well. They worked at the Ethereum Foundation or
Mhm.
around Ethereum. And when we had the first LSTs emerge, even while the beacon chain was not withdrawing, so it was completely locked ETH. And you remember that actually caused depegging of some of the LST tokens during the crash of 22. The crashes of 22, I should call it. It's a painful year. So, so they had built this thing and they, deliberately said, we're not going to allow delegated staking because it's going to cause centralization and everything. We're going to require people to, you stake, you operate, that's it, right? And then because it's crypto and because people are innovative, somebody looked at that and they said, well, I can build a contract on top of that. And then what are you going to do? And then we ended up with some of the strongest centralization there. It's always kind of arguable because you can look at an LST and then look at the number of operators they have. Do you count them as separate? Do you count them as one? Like decentralized centralization, centralized and decentralized, they are opposite ends of a continuous spectrum. And there are many, many points in between. And, Vitalik in Ethereum has actually written about this, that, like even assuming that purely centralized or purely decentralized are the best outcomes is a very narrow way to think about it. Like that would be convex thinking that like every design point between the two is worse, it's lower than the two ends. And most engineering and most life decisions, we all kind of know this about trade-offs, is that it's actually concave. Like the optimality goes up between these two solutions. And so you always have this kind of trade-off or tension. So, what you're seeing on something like Ethereum is, over the past 5 years and over the next 5 years, there is a continual search for additional crypto economic protocols, things that have better incentive mechanisms that, incentivize decentralization, as well as cryptography that basically makes collusion impossible or so difficult that it's not worth doing, and things like this that are being created over time. So, we're just starting out at Eigenlayer, and the initial look is that we actually do have a good spread of operators, working thousands of operators. There are some obviously that are larger, there are some that are smaller, but it's less than what you would imagine when you look. Like you're not looking at a network where 70% of it is like running through one spot. I mean, Ethereum got to that point pretty early on with liquid state tokens, where I think it was I believe it was well over 50% of the staking was passing through that network, which was really quite high. And so then the question is like, how do you incentivize? Some of them are, simple measures like making it very easy for new operators to be running the network, which just means like, how much do you provide standardized software? So we're working on like building and making the onboarding of people easier so that somebody doesn't have to invest as much money. Because if you have to invest a lot of time and money to do a function like operating on Eigenlayer, then you're going to end up being favoring people who have a lot of resources that are going to end up, owning a lot more share. There's also some incentivization you can do for people that are smaller operators or starting out. It requires, some level of reputation and some level of trust because you have to guard against Sybils when you talk about doing these, but you can actually provide incentives for, a wider growth of the smaller part of the market, which hopefully moves into more from small to medium operators. And, having a healthy group of medium operators is a very good point to be. I always kind of like think about it economically in this model that, everywhere in economics, if you have a monopoly, if you have one buyer, or an oligopoly, you have one seller, or, monopsony, or, or a small number of sellers, then you end up with economics that don't even work. I mean, don't even forget about like, the control part, but just the economics of the pricing becomes very skewed because one side of the market can't really competitively price sellers against each other or buyers against each other because they're only selling or buying from one person. And small numbers, I mean, we all know the oligarchs, oligarchs are referred to in Russia. I even hear them, talking about oligarchs in US and other countries at this point. And, when you have a small number of people, they control too much of the assets. They have too much control over government and everything else. So, we're kind of striving for that. So there's some practical things you can do over time. We keep seeing people inventing more and more protocol mechanisms. But I would say, our kind of heart and spirit is to be another member of the army that's fighting that fight. I think a ton of people are doing that. And, I've been definitely in the Ethereum space very aggressively. They try to trade off that concave space and they try to have, originally it was just, you have maximal decentralization, but it's a little bit more of like sufficient to as close as maximal as they can get to while still being practical. And I think on Eigenlayer, we're going to be shooting for that goal as well.
In our communities and our audiences, there have a lot of the builders. And some of them, they are trying to build upon the Eigenlayer, but they have the one common questions is about the cost. For all the startups, the cost it's always the major problems. And they just find out that currently the Eigenlayers, or the ABS, they supplies the far more economic security supplied to the ABS than the protocol they already need, or they may attractive by themselves on their own model token. So do you have any suggestions? So how can those protocols who want to building upon on the Eigenlayers and can help them to say, oh, you guys can reduce your cost to the sustainable level?
Yeah. I mean, I think so. First of all, we're not like in terms of ABSs practically spending a lot of money, rewards, everything else. Like these systems are just kind of spinning up now. The dominant kind of reward that's coming into the Eigenlayer space right now is being provided by us. It's an inflationary award. It's 4%. It then goes into a reward mechanism where stakers and operators that are running nodes are getting it from us, not ABSs. So there's always kind of a startup thing. If we started off and we just said, hey, good luck, people, you go figure it out, then we'd be doing a disservice to everyone who's building on Eigenlayer and to us as well. So very normally, like if you think about, any ecosystem, you kind of start off from a place where all of the economics are, they haven't come to scale yet. And so you don't have all of the cost efficiencies. Because if you think about it, like that number I said before of like 100 protocols sharing 5% is 5 basis points. Everyone would be really happy with that number. Maybe they'd want it to be 1 basis point. We'll try to get there. But if you only have 2 people right now and they're sharing 5%, it's really bad, right? So that's why our inflationary incentives are providing this 4% base level. And beyond that, if you look at what an ABS needs to do, right now, it doesn't actually need to provide anything on top of that. There's already operators who are running a ton of ABSs with no specific ABS rewards. We've already announced in a version 2 of our incentive system is coming out. The second incentive system, we're going to be providing a huge boost on ABS rewards. So an ABS will actually pay out some rewards, typically in its own token, although it can use whatever token it wants. We just figure it out the monetary value of it. And then we put a set amount of our 4% inflationary reward. We divide it into 365 days. And for every day, we take, roughly 1/365th, let's call it 1/400th of 4%. So, we take 1 basis point of our protocol and we feed that money out, we feed those tokens, I should say, out as rewards to people who are operating and who are staking on ABSs. But the way the boost works is that the ABSs that do their reward into it, they get a pro rata share of the rewards we're putting in based on how much their reward is compared to what all of the other ABSs together summed or combining. And so it's a very fair system, and we're not actually setting the price even, but we're putting in a huge amount of the value that's needed for operators and stakers to be interested in running ABSs on our dime, not on the ABSs. So, I would say in the short and the medium time, there's this huge amount of like protocol coverage on these things. As we get bigger and there are, we transition from dozens of ABSs to hundreds of ABSs. At that point, if you look at like what has to incentivize people to bring in stake and what has to incentivize operators, you get to economics that are vastly better than anything you would get anywhere else in the crypto world. So we have kind of the short, the medium is like more on this inflationary side, and then going from medium to long term. At that point, we've spun up the flywheel and the system will work economically, great on its own.
Okay, so Eigenlayer actually opens a new chapter and in the industry, right? So there are a lot of new protocols emerges after that. So what's your view on this, really competitive landscape? And is this kind of like competition really beneficial or you think it's harmful to the industry development, and how Eigenlayer will see the opportunity here.
Yeah, I mean, some people are down on competition, right? They sort of look at it and they're like, well, you could be putting all those resources towards one effort. Now you're splitting it among 3 or 4 places. I know the venture community really, kind of dislikes the idea that competition where multiple people are sharing the pie is negative. I mean, if you look at power law investing, the phrase that it's just ingrained in me. And I've always been like, this is why we end up in technology where we are with a couple of tech behemoths that are running specific parts of the market, is this winner takes all mentality. It comes from, I think Peter Thiel made it very famous with the power law. The power law actually comes back from, an early hundreds ago years, a mathematician named Bernoulli, who kind of noted that, like, basically as you take riskier and riskier bets, if your, chance of winning drops by, like, on a statistic chance by 4x, but if when you win, you make 16x more money, then you should take that bet. And power law is a spot where the reward on the increasingly scarce winning is rising faster than the chance of winning is dropping, because it basically gives you a higher expected return no matter how much riskier the bet is. So that's why investors, when they do portfolios, they're like, I just have to have one, Facebook. I only have to have one Tesla. I only have to have one this. And I will pay off my entire $1 billion fund with like a $10 billion outcome based on this one investment. So I kind of dislike when people, bring that kind of model and they're like, they look at competition in two negative ways. They're like, one, you're splitting resources. The second, from an investor point of view, you're splitting the outcome. So I reject both of those. In my opinion, the competition is extremely effective because if you take one team that's building one thing, which is a clear winner, and it doesn't have competition, human nature is what human nature is. This is the whole incentive, show me the outcome. If you don't have the incentive to beat the competition, the outcome is you won't work as hard. You won't be as innovative. You won't try as hard to like make hard choices about resources, hiring, what to prioritize, everything else. So it's competition that drives us to, run faster, to build better cars, to build better energy systems, to build better blockchain and decentralized technologies. So, early on for Eigenlayer, this, I would say, through the middle to end of 2023, we were looking at a situation where a lot of people, some of whom have actually built up competitors in our space, they staunchly believed restaking, the idea of it, decentralized security as an elastic open marketplace, general marketplace, didn't make sense to them. I mean, it's amazing. And then the TVL that was staked in our protocol, passed $1 billion, it passed $4 billion, it passed $10 billion. And then all of a sudden the people were like, oh, now I see it makes sense. And I'm like, okay, you couldn't see it from reading 20 papers that Sriram and other people read, and literally went to, a lot of these people who then became competitors and explained it to them. And for like a year and a half. So, we can talk about their motivations, but that's capitalism and competition. We have, people that are building things, and you learn from the competition. I always would say this in the Ethereum space, like you need to learn from Cosmos, you need to learn from Solana. It's actually good to do that. Like, don't put your head in the sand and just say that those people are bad. Like they are actually building something different. They're trying something different. Maybe they're succeeding, maybe they're failing. You can learn from both of those. So I have a very proactive sense in this, which is, competition, if it's good, it's something that you use to drive your own excellence. You deliver a better thing to your partners. You deliver better things to your customers. In our case, our customers are ABSs, the stakers, the operators. And ultimately, our end customer are the people that are using these protocols, these ABSs, because some of these ABSs will go out to the retail level. So that's that. On the investor side, okay, so I'm very bullish on competition. I said this earlier with monopoly and oligopoly. The reason these networks work, these one-sided marketplaces with one person on the other side are so awful. Like you look at like cars that have been built during the communism time in Russia, and they were just so awfully bad. But the reason they could exist and be so bad is they had no competition, right? So you can see where it gets to. Whereas, look at the amazing innovations that we've seen through, free market kind of global economics that we've enjoyed for the past 40 years, 1980 to 2020 was, I think, the heyday of globalization and free market. That's not me saying. A lot of pretty smart economists kind of point this out if you read that stuff. So then the other side on the power law and the investing, I think that power law investing and all of that is a way to kind of concentrate wealth so that, there's sort of the outcome and all of the benefits of it kind of go to the capital class, and they go to people who already had money who get more money. And in my opinion, the point of blockchain is that we, of course, want people to get rich, but we don't need some people to have trillions of dollars. Like, Joe Lubin, coming into crypto, I was like, wow, this guy's a pretty successful multi-billionaire, multi-tens of billionaire kind of person. And he would always jokingly ask the question, which I realized after a while was a serious kind of question of like, he would say, do we really need so many billionaires in the world? Because like economically, you think about it, it's like, what more money do you need at a certain point? But we need fairly, and we need for like hard work and effort to be sharing it. Like, this shouldn't be something people just sit around and expect that someone's going to pay them out huge amounts of money. So I think the crypto space where you have competition and you actually have a viable palette of people that are offering eventually slightly different things. I mean, if you look at the different blockchains we have now, and I'll just say probably the top three people would consider are Bitcoin, Ethereum, and Solana has been doing well through a couple of cycles. So I will put it in the category right now, but it's had issues in the past of being very closely affiliated with FTX and other things. So I just say centralization tends to, not do well when you're going from bull to bear markets, but but they all innovate in really different ways. Bitcoin innovates by not innovating. It's just like, I'm digital gold. I'm never going to change my protocol, and you get what you get, and that's really valuable. If you want something that is a much more efficient version of gold, you got it there. And then Ethereum is like programmable money. If you want money that can actually interact with the world, then Ethereum is your place, because Bitcoin, you get 4 transfers per second. That would be equivalent to like 200 transfers per second on Ethereum. I mean, we say Ethereum is, 15 transactions per second. The only reason it's that is because like one transaction can be a huge smart contract execution. But in terms of transfer, it's, 2 orders of magnitude faster than Bitcoin. And so that allows it to be programmable, and it, has created the scaling roadmap that, unlike this other design space of Solana, was all built around, one centralized yet still decentralized sequencer. Remember my example with Mega ETH, if you separate out the pure decentralized and the pure centralized, you can actually meld them together mathematically in a really good way. If you put them all into your consensus layer, you end up with 250 millisecond block times versus 1 millisecond, and you end up with lower bandwidth. And you still end up with only centralization at a certain level because there's a small number of permission validators in that network versus Ethereum. But still there's a huge amount of stuff. If you look at network extensions, if you look at the high frequency trading ecosystem that was built around the perp market, around Solana, all of that, there's a tremendous amount for us to learn. And, smart people kind of do that. And so an Eigenlayer side, the competition, I look to utilize it. All of the Eigenlayer, all of the people that are working at the foundation and labs, we look to it as something that brings out the best for the restaking space, and it definitely brings out the best for us. Like, I feel like once we started having some competitors appearing in 2024, once people saw the light, the billions of dollar light, then it actually really helped out a lot, because you can make harder decisions internally of like, well, we'd like to do those 4 things, but which is the one that we need to do right now? And resource management, like, it's in a sense, it's much more important what you choose not to do immediately, what you choose to put later in your roadmap. That is the critical, harder decision than what you want to do now. You know what you want to do now. It's just problem is you want to do 10 things right now and you can only do 1. So, removing those is like, something you get a lot if you really pay attention to competition and what your customers are telling you by like, what did they like that the competition is doing?
I think in the cryptos always have the hacker culture. So we just talked with Sergey, the co-founder of OneInch, and he is the beneficial from the hacker cultures. And the one inches came from the one hackathons, right? They keep trying. So everybody are competing during the hackathons, and everybody everybody competing for the rewards, and they always have the good ideas generated from all the competitions. Yeah.
Yeah,
So you just
absolutely.
mentioned,
Absolutely.
yeah. So you just mentioned about making decisions. It's about it's our the final question, the last questions. So for the next 3 to 5 years, and I believe Eigenlayer will keep learning and keep evolving and keep to finding the the deep layers of the blockchain, the whole technologies. So in the next 3 to 5 years, what do you consider to be the Eigenlayer's most important development milestones?
Yeah, I mean, I think Eigenlayer, if we're very successful, then we do two things. I used to actually call them two phases, but now I'm seeing that the two phases are happening like happens in blockchain 10 times faster than in the regular startup world. So they're happening overlapping with each other. One is improving the efficiency and the innovation rate within blockchain protocols themselves. So, we're seeing evidence of that. Like there used to be like, in some sense, I would say some of the reason that you ended up having all of these different L1s being created was that they didn't have a way to sort of get what they wanted while building on top of somebody else's L1. And in Eigenlayer, we sort of normalize and, we use Ethereum security, but we don't put the Ethereum chain as like the anchoring chain from like a, transaction settlement point in the way that Ethereum anchors L1s that are rollups to it. And so that actually allows people to build something that looks more like, a layer 1/layer 2 network on top of us. So we kind of free up the ability that people are able to have a huge amount of token value in their protocol without having to completely leave the economic security domain of the, what I would say, I would really label Ethereum as like the programmable money security domain and chain. So we do that on the blockchain side. There's a tremendous amount of people that just have a hard time kind of getting to critical mass. You have to raise a lot of money. You have to spend a huge amount of money on the marketing and all of these other things, and you can kind of focus on building much more. Exactly the same, like before the public clouds, you have to actually spend millions of dollars building out your computing hardware, your data centers. And that was just too expensive. And that's why everyone loved when they could just like rent this as they go. So unlocking security in this way is that kind of an unlock, in my opinion. So that's on the blockchain side. That makes blockchain a much, much better infrastructure. And I think it elevates it where blockchain now is able to handle the capacity needed to move over the entire tech stack that we all use every day and move that entire stack over, not to become blockchains, but to be using this blockchain cloud of services as the kind of, secure version of databases, as the secure version of computation services. And, when we do that, then that second part, the first part is super valuable. Of course, everything in the blockchain space is valuable. But that second part and, really moving over the tech stack that, the global economy is built on over to settle and be secured by blockchain. That's something, like I said earlier, the consumer market, consumer market total revenues in consumer markets is like 2 trillion. In enterprise or business markets, there's like another 2 trillion of revenue that's spent in the tech stack worldwide. It may be higher now. I honestly haven't looked at the number for like 5 years, but, but it's a huge kind of unlock. And, while, so I don't want to discount DeFi. Okay. I may not be a person who's super financially motivated personally. And I also never really worked. I didn't come from the fintech world. I came and I've learned a lot about it. And so I put absolutely, you can't actually build a new technology world built on technical security without having money in the technology. So not just having like outside money, like gold, like it's great to have gold. It's not tied to some nation's currency. The problem is you can't do computations passing around little gold coins, So, but you can do it. You can tie together these gold coins effectively through the crypto tokens and make it at the base layer. And that's important because eventually, like if you go to New York and you look at how much foreign currency is being settled through New York on a given day, do you guys have any idea? Have you heard this number before?
No,
It's
I
in the
haven't.
range of $7 to $10 trillion of currency passed through New York companies daily being cross-settled. This is what the
Daily.
global economy needs. trillion. And this is why it
Jesus.
tells you why there's so much money there. Because like you could have a fraction of a basis point, and 1 basis point on 77 trillion is it's like around a billion or so. But still, it adds up to a lot. Because
It's
that's
a
only one
billion.
source.
It's still billion.
Yeah. It's a lot for one day, and it's only a portion of
Yeah.
the revenue because the financial markets make a lot of money on that's money in movement. There's also money that you make on money in storage. And so a lot of the financial world is like about that side as well. The lending market, the transaction market, all of those types of things. So that second part to me is really the exciting part because that's when we get to like we built the internet in the late 90s. It then became Web 2 and with cell phones became like part of everybody's lifetime experience. We all live with our being in the real world, and we also have this digital version of ourselves, this digital shadow that lives entirely in technology. And so this unlocks it that the digital shadow can now be rebuilt with rules that are not corporate and like, kind of investor and stock market focused, but are instead focused on people who are trying to build things that are healthy for humanity and healthy for the way that we coordinate. Shriram always has this statement, which maybe you're getting an inkling of from talking with me, that Eigenlayer, over time becomes the coordination superhighway for humanity. And that's kind of what it means that, you rebuild a technical stack. And if you look at elastic shared security, in theory, like in, phase 3 down the line, you could be taking security commitments and writing them into like off technology commitments that you're making. You could be de-risking real world transactions, kind of like real world assets. You could have real world commitments that are being brought on chain where, crypto assets are basically getting value for providing the security for things that you're doing that are not even in technical sense. So, there's a lot there because like, we obviously have to have buildings, we have to have, police forces and, all of this other things. We need courts and, judicial systems and, all of that criminal and civil. So, it gets kind of wild if you start looking out, 10 years. But let's just focus on phases 1 and 2. Like phases 1 and 2 are being very heavily built now. And the phase 2 one, I just want to say one other comment is that I just got kind of tired at a certain point when I got into crypto. Every like VC talking about their favorite startup would be like, this startup in blockchain is the AWS of, crypto. And I was always like, okay, like, do you understand like what ABS is? What AWS really is? I talk about it if you look at, there's a talk that I give, which is like, moving the public cloud to crypto, right? And what I actually talk about is like, all of AWS is extremely decentralized now. The only thing that's centralized in AWS is the control of the money, the control of who gets to, bring hardware into the network, who gets to bring software into the network, who receives the payments, who decides to take their cut, the pricing, all of that is centrally controlled by them. So, I kind of view when you look at that aspect and, why does AWS get to do that? It's because sure, they bring a lot of resources, but so do many other cloud providers, but they have this trust and this like integration, but I'll focus on the trust part especially, that once people stick with them, they're like, okay, this is a corporation, it's huge, this works, let's just stay there. It's a safe place. So if we can actually bring that level to developers around the world who are bringing technology, that decentralized trust through blockchain and crypto is not just the same as, but it's actually better than any real world company. You notice all the time, real world companies fail. They come and go, right? The vast majority of corporations in the world are like 3 or 4 months of cash away from going bankrupt. They just have to keep making revenue.
The trust is based on the reputation, not based on what you guys are doing, what the security it is, right?
So it's a weird thing to say that like Eigenlayer, like if someone wanted to call Eigenlayer the AWS, like you could look at the trust and the kind of like, the monetary, aggregation of AWS 3, of AWS, and you can say like, oh, well, Eigenlayer is that. But I don't think anybody thinks that is AWS. Like AWS will be all the protocols that are building, in the crypto space and many of them on Eigenlayer. And Eigenlayer is just facilitating taking the locked up security on every single chain in crypto and then pooling it and making it something that now as a Web3 network effect can actually defeat Web2. So, that to me is like the critical unlock of AWS. And then you may ask, like, why didn't investors see that? Well, because that's very complex. And like, that's harder to see than a winner takes all of like, you look at a network like Dfinity that came out and they were just like, we're going to be the AWS. Okay. And they're going to control the hardware and they're going to control the software and the API layer. So I just saw somebody talking about, bringing the AWS to crypto and maybe not the way we want it.
It's more like one line pitch. So that they
Yeah.
don't need to explain a lot of stuff. So, everything's concentrated. So it makes the people
Yeah.
understand more easily. That's, I think, their
Yeah.
purpose.
Yeah.
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 I mean,
Exactly. Exactly. No, you're
yes.
100% right.
Yeah.
Amazing.
Yeah.
Oh, yeah, go ahead.
Yeah. So, what's mainly the challenge currently, in the sharing security, the landscape?
I mean, so we're starting off like a
Mm-hmm.
multi-sided marketplace. And so we're starting it off like initially we had to kind of start off that there was enough stake in the system that it made sense. And so the first flywheel that we were really focusing on was on the staking. We thought we were going to have to really focus heavily on like the operator side of the network. That ended up just taking off really well on its own. Like we were getting hundreds and then even more operators just from us like spinning up that first flywheel. On the actively validated services, the protocols that take, a huge risk when they choose an ecosystem to build on.
Mm-hmm.
That one is one that both has been doing really well in the sense that it's like spinning up and a lot of things are coming to it. But it's also one where, I think that's where a lot of our focus is now on. How do we actually help the people who are building the services and the protocols on Eigenlayer become very successful? How do we help that people who are building using this security model versus like building on a monolithic security domain somewhere else in crypto? How do we make sure that that is actually the best model for them? And we want to do that on a repeatable basis for many of the top protocols that are coming out. And, we want them to be able to kind of trust and use each other's security because fundamentally when they're using security from another protocol building on Eigenlayer, they're sharing and getting cost effectiveness, inside of their network as well. So that probably, if I was saying like where the focus is for us these days. And then if you think about protocols that are building on us, what does this mean? So a lot of them, they care a lot about total value locked. It helps with like their liquidity, their slippage, it helps with interest in them. They want to have, they don't have to worry about a lot of operators. They don't have to worry about a lot of stake. That's all available in our network. But then they also have to have a lot of users. And so, there's a big focus for us of like, how do we make these protocols that are coming in have like a shared user effect that's larger than what you're getting in other places of crypto? How do we help them have a shared liquidity effect that's larger than other places? These are not easy problems. I don't want to tell anybody like, hey, this is all just like up and to the right, no problem. Like we are working hard on it. We have a large team. We're not only engineering, we have a large business development team. We have a lot of people out there working on community ecosystem growth and everything else.
Mm-hmm.
And we'll still be growing that massively into the next year as well. So, but that's our focus. I would put like, if I was doing the one line thing, I would say like, we're very focused on the net value that comes into Eigenlayer comes in from these protocols, these AVSs. And so our focus is on making them successful. That's really, if it's sort of like long-term, the success of Eigenlayer is measured by the success of AVSs. There's nothing else. Like the long-term value that we get in Eigenlayer is only set by them.
Thank you so
Yeah.
much, Robert, for your
All
time
right.
today. And
Thank you
I'm
too.
really looking forward to, invite you back in, quarterly or 6 months later to see any
Yeah.
updates on Eigenlayers. Especially, actually, I want to ask you the question, but I prefer not to, because yesterday I saw Serene post a photo outside Hyperbolic office and said,
Hmm.
we are cooking something amazing. So I'm pretty sure it's like some secrets, and I don't think you want to share this early. But so let's keep it. Perhaps
Yeah.
3 months or 6 months
Yeah.
later, you can come back and tell our audience what will be that secret, and is that something will excite all of us? Especially
Yeah.
with
Yeah.
AI,
Yeah.
right?
Yeah.
So,
No, I mean,
so.
I always had a little more information about Eigenlayer from the start because I was working as a research partner with
Mhm.
a VC firm, not Polychain, but one of the sort of co-leads of the pre-seed round for Eigenlayer. So,
Mm.
but part of the things that made it so attractive for me to get an Eigenlayer is that I didn't want to be on the outside seeing a picture of Shriram with any other protocol. Like I happen to be in the privileged place where like I get to know these things and I get to have an impact on them. So it's really great to do. I always, when I talk with people about like, do you want to work as a VC, an investor, others, I'm like, if you like to be in the action, go find something you're passionate about. Go find a group of people who are also passionate about it. Start a company or join a group of them that have started a company, and you're going to be happy.
Oh, so I didn't know that you collect the
I didn't
the
personally.
VC, right?
There was a VC, but yeah, no, I was so I was working at this place, but so like from the very beginning, I've just followed the track of Eigenlayer. And for me and Sriram, we actually met back in the previous bull cycle of like 2016, 17, 18. That one, because he first came into the space then, and he was doing Trifecta and Prism and some other startups and other stuff. And when you see someone who's really smart, very charismatic, very optimistic, they're like a lightning rod. You're kind of attracted. So I've enjoyed knowing him for quite a while now.
Okay.
Yeah. Thank you, Robert.
Okay.
You answered me a lot of the questions, and you make all those papers I've read make sense.
Yeah, no, really happy to do that. We didn't even talk about governance and other things. So, some follow-ups, depends what your audience likes to talk about. But hopefully this was interesting to some people, but,
definitely.
And also really great to meet both of you. So, thanks for inviting me on the show.
Yes. Hopefully I'll see you in person again in June next year. So we're heading to the permissionless. I'm not quite sure whether you'll be there. And also we head to Hong Kong in February this year for the Consensys. See if we'll see each other again.
Yeah, between me and Sriram and other leaders of the company, there's a lot more of us hitting Asia, Hong Kong, Singapore, Japan, Korea, other places. Throughout next year, and then people are coming over here. I don't know how many people are going to trek down to Argentina for DevCon, but I'll be there too.
Oh, really? Oh, you already know that.
Ask Skylar, and he keep it a secret.
Okay. I'm hoping I'm not like putting a secret out. The thing is, even if I'm saying it, maybe I'm wrong. But that is what I'm understanding on like where it's going.
But Argentina, we definitely go. I've never been to South America.
Yeah. There's a couple of really amazing dev teams that are down in Argentina. Lambda Class and Wonderland are two that I know of. Just really passionate, great crypto builders. So I think it's going to be an amazing DevCon. I love that DevCons go to different regions of the world, and they're just like, we're just not going to do a DevCon in New York City. Like, we don't need to feature in New York City. So this last one in Thailand was amazing. I love that choice too.
Indeed. Yeah. Okay. Thank you so much, Robert.
Thank you both.
Hope you have a good evening. And then enjoy your night.
Thank you.
Yeah,
you too.
See you soon.
Yeah. And Merry Christmas.
Merry Christmas. Happy holidays to everyone.
Okay.
Absolutely. Bye-bye.
Okay.
Bye.
It brings the people out tonight. I need that swinging rhythm.